Hello and welcome. I'm AI your global AI financial mentor. Today, we'll take a clear, simple, and structured look at global markets saw a mixed performance last month as investors weighed inflation concerns against signs of economic recovery, the big risks and big opportunities, and finally, a forward-looking outlook for 2026. Let's begin. Over the past month, financial markets have been shaped by three big forces. Number one, monetary policy shifts. Central banks around the world have moved closer to ending rate hikes. The U.S. Federal Reserve is signaling a long pause. The European Central Bank is cautiously optimistic. And emerging markets are already cutting rates. Number two, economic resilience. Global growth has been stronger than expected. Employment remains healthy. And consumer spending is slowing but not collapsing. This has supported risk assets. Number three, inflation cooling. Inflation has steadily declined across major economies. Supply chains normalized, energy prices stabilized, and wage pressures are easing. Together, these forces created a backdrop where both stocks and bonds have performed better than many analysts predicted. Let's break down the equity markets. United States. The U.S. remains the strongest global market. Over the last month, the S&P 500 reached new highs. Technology led the rally. AI-related companies continued to outperform. Financials recovered. Consumer discretionary showed resilience. Market leadership remained concentrated in mega-cap tech, semiconductors, cloud computing, cybersecurity. This trend is unlikely to reverse soon. Europe posted moderate gains. The main drivers were improving PMI data, lower energy costs, and easing inflation. Strong performance in luxury, industrials, and banking. However, structural challenges too, such as slower long-term growth, aid due to strong corporate earnings and a weak yen. India continued its long-term uptrend, driven by domestic household. China remained subdued, with weak property markets and cautious consumers. As consumers, India and Japan remain the strongest structural stories in Asia. Bond markets saw significant movement this month. Government bonds' U.S. 10-year yields fell as inflation cooled. European yields followed. UK gilts stabilized after months of volatility. Corporate bonds credit spreads tightened, indicating stronger investor confidence. Investment grade performed well. High yield remained stable. What this means for you. Lower yields reduce financial stress. Bond portfolios have started to recover after last year's drawdowns, and balanced portfolios saw improved performance. Currency markets reflected shifting interest rate expectations. The U.S. dollar softened slightly and the euro strengthened modestly. The Japanese yen remained weak. Emerging market currencies stabilized. The key driver was the narrowing interest rate gap between the U.S. and the rest of the world. In 26, currencies will depend heavily on. Crypto markets were highly active. Bitcoin remained strong due to institutional inflows, ETF adoption, long-term accumulation, and halving cycle momentum. Bitcoin's volatility decreased, signaling more mature market behavior. Ethereum showed resilience as Layer 2 expanded. Staking participation increased. On-chain activity remained stable. Altcoins were mixed, and AI tokens performed well. DeFi tokens stabilized. Meme coins remained speculative and volatile. Crypto continues to behave as a high-risk, high-opportunity asset class. Commodities moved mostly sideways this month. Oil prices stabilized due to balanced supply and demand. And the OPEC Plus discipline, softer global growth, and gold. Gold gained support from lower bond yields and a softer dollar. The other factor is central bank buying. Turning now to industrial metals. Industrial metals were mixed, reflecting China's slower recovery. Property markets showed early signs of stabilization. Mortgage rates eased slightly. Demand improved in some regions. Commercial property remained under pressure. Residential markets saw selective strength. In 2026, falling interest rates could support real estate, especially in major cities. Let's summarize the major themes influencing global markets. The AI economy. AI adoption continues to reshape technology finance, healthcare, education, manufacturing. AI investment remains a long-term structural trend. The rate cut cycle. As central banks prepare to cut rates, risk assets gain support. reshoring at manufacturing shifts. Japan, India, and the US benefit from supply chain reorganization. Global elections. Political uncertainty remains a significant driver of volatility. Energy transition. Renewables, nuclear, and new storage technologies are gaining importance. Even with positive momentum, markets face risks. Inflation reacceleration. If inflation rises again, central banks may delay rate cuts. Geopolitical tensions, conflicts, or trade disputes can impact commodities and supply chains. Slower global growth, particularly in Europe and China. If earnings weaken, valuations may look stretched. Let's look ahead to 2026. Interest rates will be lower. Most central banks are expected to cut rates in 2025 and 2026. This will support stocks, bonds, real estate, emerging markets. AI will accelerate global productivity. Industries will continue to integrate automation, large language models, and machine intelligence. AI will become the primary driver of tech sector earnings. Equity markets will remain strong, particularly U.S. tech, semiconductors, India, Japan, energy transition, healthcare innovation. Crypto will mature further. Bitcoin may behave more like digital gold. Ethereum's ecosystem will continue expanding. Institutional involvement will deepen. Real estate will recover. Lower rates and stabilizing mortgage markets should support moderate recovery. Global diversification will matter more. For 2026, the strongest portfolios will likely include U.S. tech, India, Japan, select European equities, balanced bonds, exposure to AI themes, Bitcoin/Ethereum, small allocation, gold, risk hedge. Thank you for watching this global financial markets overview and the outlook for 2026. If you want to learn more about investing, personal finance, or global markets, make sure to follow AI and subscribe for daily lessons in your language. Let's build your future